couple of weeks ago, Blackberry rose roughly 20% on rumors that the private equity company Veritas Capital was potentially going to acquire the mobile giant. In that stretch, Blackberry went up 20% in 5 trading days. And if you look at the weekly chart, from the lows at the beginning of the year, at one point the stock was up almost 60%. Stock right now is trading at $4.83. But to put that in perspective, you gotta zoom out. And what do I mean by that? Well, over the last 5 years, stock is down roughly 50%. And if you go back to the 2008 highs, stock is down roughly 97% when the stock traded above 140. On the way down, going back, had many opportunities to short. You had this big M pattern. And the break of the trough was a shorting opportunity. When price tried to push up and couldn't get back to the highs back in 2010 at $70, that was also a shorting opportunity. And back in 2021, we had the infamous Wall Street bets pump. That was an opportunity to short. And a couple of weeks ago, that was setting up for a shorting opportunity as price was nearing the weekly sellers level at $6. Getting back to Veritas, so there was a article that came out by Reuters, and it stated that Veritas was in early talks to buy the Canadian software startup. BlackBerry declared in May that it would assess its assets and consider new tactics to increase its shareholder value, that including liquidating its legacy phone patents. Now today we can see the stock has sold off. It did nip its toes at the lower end of this weekly sellers level. Let's look at that on the weekly chart. So what was I seeing? It's not the prettiest, but you had a drop in price, a couple of basing candles, and then the drop. So leg in, base, leg out. Gave you two opportunities to short. Price nearly got to the zone before pulling away, which meant that there was definitely sellers waiting for price to get into the zone. And what we can see now is that price is selling off. Let's go to this article to find out the reason why. It is coming from Reuters again. BlackBerry expects to report drop in quarterly revenue. Shares dive. So BlackBerry is forecasting a 21% decline in its second quarter revenue due to weakness in the Canadian technology company's cybersecurity segment. That's right. They moved from mobile phones, tried to reinvent themselves to get into the cybersecurity business, sending the stock down 10% to begin the trading day on Thursday. In its preliminary results announcement for the quarter, the company said it expects revenue of about 132 compared to 168 million. Analysts were expecting 160 million. CEO said the following: given the product mix, delays in closing certain large deals are expected to impact revenue recognized in the quarter. Again, Back in August, media reports said private equity firm Veritas Capital made an offer to buy Blackberry months after the Canadian company began a strategic review. So now Veritas can get it for a little cheaper today, right? Let's go back to the daily chart. When they announced the potential buyout, prices were trading at about 460, but then we had this huge run up. Yeah, prices were roughly trading, 450-ish, and then the huge run up due to the rumors of Veritas buying the stock. However, this gap down, we got a gap and go situation. This gap down and go was due to their preliminary quarterly earnings coming out lower than expected. So where's price heading? It's heading right back to the origin of the strong move higher. Look for price to continue to move down and test the 200-day moving average at about 450. Again, that's the origin of the strong move higher. So you have a lot of confluence. Even when we get down there, I would not buy. Blackberry is just a dead stock. Thanks for watching. Subscribe, please. Like the video.